All right. Welcome, everyone. We just went live. We're going to wait to get started here to go live on all the different platforms. So bear with us here while we wait a little bit. Got the chat pulled up for people to check in while we're waiting here. Hope everyone's having a great morning. There you go. Good morning. Just pops in the chat. Good morning, everyone. Good morning. Good morning. There we go. So for those of you that just jumped on, we're just going to wait a few minutes. Need to wait till we go live on all the different platforms, and then we will go ahead and get into the show for today. Thank you for tuning in. I see a bunch of familiar faces here as well. Shout out to the Mortgage Calculator team tuning in. Wait a few minutes to get started here. Hopefully everyone had a great 3-day weekend. Hello, everyone in the chat checking in. Some more people. All right, looks like we are almost live on everything. One more platform here to go live. You can check in the chat there if you're just tuning in. Drop a little comment in there as we get ready to get started. Good morning, good morning. Okay, looks like we are live on all the different platforms, so we can go ahead and get started. Good morning, everyone in the chat. So, welcome, everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator. I am joined here by our president, Nicholas Hiersche, and our sales manager, Jose Gonzalez. So we do this show every morning and go over some live rates and do a deep dive into a subject. So we'll go through the live rates today of all the different programs, and then we will do a deep dive. And today our deep dive topic is USDA loans. Definitely a great program if the property is in a certain area, right? It needs to be eligible. So typically on this show, we don't really dive into those rates because not every property is eligible. But today we'll touch on it, and then Jose will go more into detail about USDA loans. So if you are a loan officer tuning in, these are great tools, and Jose will go over how to use this as a tool and when it's possible to use this as a tool. So with that being said, let's go ahead and get into it today. We'll have Nick go ahead and share his screen, pull up our pricing tool, and go ahead and get into the rates. So check out all the rates. It's nice to see them every day. We check in, see them going up and down, and see how the market is doing. And then after a little bit here, we'll get into the USDA loans. So go ahead and take it away there, Nick.
All right. So I just shared my live tool here, guys. This is our pricing tool. Let me zoom in a little bit, actually. So it'll be bigger on your screens. So this is for our team of loan officers. This is our pricing tool. So again, this is for our mortgage professionals. This is going to show us the general pricing indication for today. Again, it is February 21st, just after 11 a.m. Eastern. So all of our programs, for our standard programs at least, rates are live here on the Pricer. If you want to get a detailed loan estimate, please get with our team. We have over 350 loan officers, and we're licensed in 21 states as of this morning. We just got approved in New Jersey this morning. So we now have 21 states for primary and second homes. And then when we talk about our Dscr business purpose loans, we can do those in almost every state. So please get with our team to get a detailed breakdown. But let's use the tool to check out what's going on in the market today. So like we do every morning, we're going to pull up a standard scenario of an 80 LTV, 20% down payment purchase. We're going to search for a desired price of 99. What does that mean? That means that we're going to look for one discount point and buy down. Most of our borrowers are asking to buy down the rate a little bit because of the kind of increased rate environment we're in right now. So that's typically our request. So that's going to be set for all of our scenarios. We're going to start with conforming. conventional loans. Then we're going to do an example for FHA like we do every morning, which is typically the second option for most borrowers. And then a lot of lenders and banks do not have any other options besides that. Thankfully, we have over 4,000 non-QM loan programs under our expanded guidelines. So we'll check some of those out as well. And then we will not go through the VA. We did that yesterday, a deep dive into VA. Our veterans, we appreciate you, but since not everybody qualifies, you must be a qualified vet. Please get with our team. We'll quote you in a few minutes. And then same thing with USDA. Since only certain properties qualify, we don't do that on the live rates. But today is our USDA episode. So Jose is going to go into a deep dive on some detailed USDA quotes today. But for our samples here on our live rates, we're going to check out first conventional, FHA, and then non-QM. So first, let's start with our conventional. Purchase, fixed, 30 years for our terms. Primary, single family, 1 unit, state of Florida, county of Miami-Dade. Those are going to be our settings. That's where our office is based. And for all of our estimates today, we'll use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40. That's just to get our general pricing. We'll keep that the same for all of our examples so we can compare apples to apples. And let's check out what our live rates are this morning. And as we go every morning, these first programs that pop up are specialty programs. The Home Ready and Home Possible are for borrowers under an area median income usually, or in a census tract. So let's cruise down to the first standard one so that we can compare. Looks like the first one that pops up here is a conforming 30-year fixed, 6.75 interest rate for 0.875 in discount points of cost. So that's what the computer found was the best combination. Last about a little over a week ago, we saw rates just under 6. Now we're seeing rates in the high 6s. So you see the markets fluctuating with all of the news about the Fed and inflation and all the different market conditions that affect these rates. That's why we love to do the show, to watch them go up and down. So please get with our team if you're ready to pull the trigger on one of these. For our second scenario, usually the next best option for most borrowers is to use an FHA program. So we'll pull up the same scenario, 80 LTV, 20% down. This time we'll go to FHA. Everything else will stay the same. But with our FHA programs, that will usually allow our borrowers to qualify with a little more income because it has a higher DTI ratio that can be used and a few other more lenient guidelines. So FHA is usually the next best option. And let's check out what we have today. So the top option here, again, last week we were in the 5, so we will have to do this show and watch the rates change over time. But this morning, it looks like the best option the computer found was a 6% rate for 0.875 in discount points cost. And remember, with FHA, there are monthly mortgage insurance and upfront mortgage insurance. So always look at the APR, which in this example is 6.903, to compare apples to apples across all the programs. So this is a great option. I might even quote my customer maybe this option as well. It's a great 6.125, a little bit higher rate for less discount point and cost, 0.625 discount points. So when Jose does the deep dive, you'll see that we love to give our customers options, but we have a ton of options here. Now, where do we go if our customer doesn't quite make the cut on FHA for some reason or can't qualify for the home they're looking to purchase? That is where we love to specialize here at the Mortgage Calculator and have over 4,000 other loan programs besides just conforming and FHA, which is typically the end of the road for most other lenders. We have over 4,000 expanded guidelines, aka non-QM loan programs, that use alternative income documentation to make our borrowers' dreams come true. So for this example, we'll pull up the same scenario, 80 LTV loan, 20% down payment for an expanded guidelines, purchase, 30-year fixed. Everything else is going to stay the same. Our estimated FICO score of 760. But in this case, you see a new option pops up for our income verification. In this case, we're going to use, let me scroll down a little bit so it goes down. We're going to use full doc is, full 2 years tax returns. That's what it takes for FHA and conventional typically. So obviously we're going to look to one of these other options. 1 year alt doc, 2 year alt doc, asset related, business bank statements, 12 and 24 months are very popular. Investor Dscr products are amazing. We'll talk about those in a second. And our most popular products at all typically for a borrower who may not qualify using full doc are going to be our personal bank statement 12 months. And that's because we're going to have typically a self-employed borrower. So this is for a self-employed borrower. We're going to use 12 bank statements to determine their debt to income ratio. So many times our self-employed borrowers, when we use their 2 years of tax returns, don't quite qualify for the income we need because they have various write-offs and other things that they're doing as business owners. So we can go to a non-QM program. We can get 12 months of their bank statements and determine their actual cash position in order to determine a debt to income ratio with those actual statements. So very different way to qualify our customers. Our customers typically always qualify for more purchasing power when using these alternative income documentation methods. So this is typically how we provide a solution for a borrower who would not otherwise qualify. So let's check out our bank statement 12 months options today. And we'll see a bunch of options here. And as conventional rates increase, these are ever more viable. Look at the price here. The top option for bank statements, we have a 7.25 rate. And remember, conventional was just 6.875. So we're right there, right near conventional rates here, which is pretty amazing. And this is one discount point in cost. So just a hair more in discount points there for our bank statements. So right now, today, our bank statements versus our conventional programs are almost apples to apples, which doesn't often happen. That's why we love to work with these non-QM programs. And you'll see here we have dozens and dozens of other options to use bank statements. All these programs do vary. Some of these may allow things like a credit event, like a foreclosure or a bankruptcy. So please get with our team. They can navigate which one of these hundreds and even thousands of programs that we have that will fit best for your situation. But I love to see this show and do this show every day where we can see the non-QM get very close to the conventional, especially today. So for all of our non-QM borrowers, you should be very excited today. For all of our conventional borrowers, you might need to pay attention as the markets react to different things. Now, let's switch gears before we pass it over to Jose and do our last couple live rate examples for our investment properties. So we love to work with investors, whether you're a first-time investor buying your first investment property or you have 100 or 1,000 properties and you're just looking to cash out more, purchase more, we have the solutions for you. So first, let's pull up our conforming conventional option, and then we'll pull up our expanded guidelines option. Remember, FHA, VA, USDA, they do not work for investment properties, so we're going to simply compare our two most common options. For conventional conforming, purchase 30-year fixed, everything else is going to stay the same that we've had for all our scenarios. And let's see what our investment property rates are. Keep in mind that the government-sponsored entities, the Fannie Mae and Freddie Mac, have added additional penalties, loan-level price adjustments for investment properties. So while we see some great rates, 7.125 here, we see that there are no one discount point cost options when we add investment property because they've added these adjustments to these loans. So we see here the lowest option we have is a 3.75 discount points in cost for a 7.125 rate. So our investors that are looking to get an investment property often ask for an alternative solution because they do not want to spend this many discount points, and we don't blame them. Obviously, in this environment, we just can't go up in rate. You'll see we have a couple options to go up in rate, 7.25, but they're still very expensive. So many of our investors don't mind going to an 8 or 9% interest rate as long as they can save money out of pocket. This might be the best option I see here, 7.5 rate for 2.875 discount points in cost. But again, we're at a threshold here. So that's where we love to offer our non-QM loan programs. And we have thousands of options for our investors out there. So let's switch this up to investment and expanded guidelines. So we'll see our non-QM investment options, and we'll see two new boxes popped up. So when we do a non-QM example, we're always going to do our income verification first. And with our investor Dscr program, this is by far our most popular program, and that is because it actually does not require any income verification for the borrower. It is based solely on the property rental income. We're going to make sure the property has estimated rents that can cover, typically in most cases, the PITIA, the mortgage payment, interest, taxes, insurance, and association, right? We're going to make sure it covers all of that, and that's a DSCR ratio of 1. So most of our loan programs for DSCR allow us to not require any income from the borrower because we're going to determine that income from the property. We even have options if a property doesn't cash flow, or options that are better priced if it cash flows at a higher level. So get with our team. They can navigate the DSCR for you there and find the best program. And the next step here is our prepayment penalty for a non-QM investment property. We typically always have a standard prepayment penalty of 3 years is what we'll price today. There are 0 prepayment options. That just does restrict the amount of loan programs we can offer. And there are 5-year options as well in case you want to hold a property for longer and don't mind a 5-year prepayment, we can reduce the costs in some cases. But for 3 years is our pretty standard. That will give us the most options for the loan programs here. Now let's check out our investor DSCR mortgage options. So you see here a little bit higher rates. Obviously, conventional was in the 7s. It doesn't really go higher than that, right? There are no conventionals in the 8s. Otherwise, we might have some more attractive options. But fortunately, with non-QM and DSCR, we can go into the 8s for our investors, where properties still make cash flow at an 8.375 interest rate here. And thankfully for our investors, the solution is less discount points. So just 0.975 in discount points for that 8.375 rate. So these are great alternative options for our investors to compare with conforming. So, and especially, as I mentioned before, in this market, when conforming is kind of rising, we love to watch the non-QM, which stays pretty steady over time. And right now, today, a comparable conventional is comparable for a primary to non-QM, as well as you see here, a conforming conventional investment property option is also comparable to a DSCR non-QM, which is pretty amazing. We love when those times intersect, and we love to satisfy our borrowers who are looking to use these alternative programs, because that's really what we specialize in. Let me just scroll down here. You guys can see there's just dozens and dozens of these different DSCR programs with various DSCR ratios, prepayment penalties, etc. Please get with our team. They can navigate the ones that may fit best for you. You see some are for high ratios, some are for low ratios, etc. So please get with our team. They'll find the one that fits you best and get you set up for that. But now, let me go ahead and pass it back over to Jose for our deep dive topic. Let me pull up the graphic real quick before we go into it. All right. So again, today, just like every day, we're going to go through a detailed topic. And since we don't do the live rates every day on USDA, because not everybody qualifies or is looking in a rural area, we're going to have Jose go into a deep dive for a specific USDA example where a property does qualify and is in a designated area. So Jose, you can go ahead and take it away.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Jose Gonzalez here, 27-year veteran, licensed as MLO and Realtor since September 1997. We have now a very interesting program which does allow for 100% financing. Now, you know, we have VA option, which is 100% financing, and the USDA option, which is also 100% financing, which does not require the borrower to be a veteran, but it does require the property to fall within a certain USDA approved area. So there is a USDA geocoder that you can easily obtain, any quick little online search, and then you can just plug in the address of the prospective subject property and see if the property falls within a USDA area. So keep in mind, we can approve our borrowers for USDA loans. However, a final check always has to be completed to make sure that the property falls within a USDA area. Something also real important to consider is that USDA loans need to be uploaded and automated underwriting completed on the GUS, that's GUS, GUS portal. So for all of our team MLOs out there, please remember, get your USDA credentials. So, you know, that's just a quick little link, and you will get the credentials to be able to upload files into the GUS portal so you can complete your automated underwriting and then issue your pre-approval letter, because that is something that we wanted to note, that at the Mortgage Calculator, our pre-approvals for all loan types are solid pre-approvals, that we take them all the way through the process, except for, obviously, we don't have a contract yet. We're not going to be ordering appraisals. But when our borrowers do approach us for a pre-approval, if it's an agency loan where automated underwriting is required, we will complete full loan application, obtain credit, review assets, income, and all the other pertinent aspects of that loan, and then, if applicable, run it through automated underwriting so that we do obtain the pre-approval. So in this scenario here, now we have 100% purchase USDA loan, which I'll go over here. You'll see, to add a couple little comments there, obviously about the USDA is designed to serve agricultural area type communities where, normally you may have an issue trying to approve a borrower for a property where the comparables are few and far between. They're 5, 6, 7, 8 miles apart, things like that, that would normally be a stumbling block for regular conventional loans, or agency loan, should I say, is not necessarily going to be an issue for a USDA loan, where that is a normal occurrence in agricultural areas. USDA loans also have reduced MI. So for this loan here of $500,000, RMI is $146. Very, very low. Definitely lower than FHA. And if you check quotes on conventional loans, you'll probably find them to be around the same amount or a little bit more at a 95 and a 97% LTV. So considering this is 100%, I believe the factor on MI loans is 0.35. On FHA, they're 0.85 at 95.01 and above, and 0.8 at 95.0 LTV and below. So here you see great option. If you remember the rates Nick was quoting for the other products, the other agency products, this one at 6.125% rate is offering a lender credit of $615. And you can buy it down to as low as 5.375% at a cost of 2.5 points, or $12,500. Now, again, buy down is something you discuss with the borrowers to see what their objective is, how long they're going to be holding the property, because you'll know not a whole lot of difference from one interest rate to the other as you progress by 0.125. However, if the borrower needs a lower payment in order to qualify, then obviously it's a no-brainer. So now I'm going to show USDA rate and term, because USDA does not allow cash out refinances using their 100% program. They don't allow cash out refinances at all, because the purpose of this program is to allow people to be in a home or stay in a home and not necessarily profit from doing a cash out refinance. So you'll note the rates are a little bit higher in cost, where 6.125 here has a half of a point cost, or $2,500, with the lowest buy down option being down to 5.375 at a cost of almost 2.5 points. So very good options here, USDA agricultural communities. So when you are looking at that property in one of those areas that you're having issues with comps, do not forget about USDA. There are no real you do have to check HUD median income levels. There are some slight income restrictions that you can use it, because obviously they don't want somebody making $1 million a year going for 100% USDA finance loan that is really meant to help borrowers that work in those agricultural type communities where the incomes could be a little bit lower. So we do definitely have to give consideration to the people that produce our food. Hence, we have the USDA loans to make sure that everybody has as good of a chance as possible to get the American dream of home ownership.
Perfect. Thank you, Jose. All right. Well, another great deep dive there into a program. So We do this show every weekday at 11 a.m. Eastern, where we go through the rates and then do a deep dive. So every day we have something different. So definitely tune in daily. We have over 350 loan officers all across the country, as Nick mentioned earlier. So you saw the rates today, the general rates, but you can get with one of our loan officers to get a specific quote like Jose just went over, which you can really get in minutes most of the time with most programs. So if you're already working with one of our loan officers, maybe they shared this video with you, that's great. If not, you can visit us at themortgagecalculator.com and we can put you in touch with one of our loan officers. Now, one thing that you'll see with our loan officers is that they are consultants and they are trained to not only be able to do conventional FHA, USDA, VA, but they are trained to be able to consult you through the process as well as do all these different non-QM programs that Nick went over as far as the bank statement, P&L programs, DSCR programs, of course, all the way to commercial, fix and flip, ground up construction, and everything in between. So get with one of our loan officers, themortgagecalculator.com, or you can send us an email, info@themortgagecalculator.com. We'd be happy to connect you with one of our loan officer consultants. So every day, 11 a.m. Eastern, tune in, and we will hope to see you tomorrow. Thank you, Nick. Thank you, Jose. Everybody have a great day. Take care.